If you're planning to buy or expand a $5 million service-based business this year, the entire funding playbook just changed. The 2026 SBA Pilot Program completely overhauled the approval process. At Sense IQ, we handle the heavy lifting bookkeeping and financial strategy for growing service businesses. Today, we are breaking down exactly how you can get your books deal ready to leverage these new SBA rules. Historically, the SBA demanded a strict 1.25 debt service coverage ratio. The new pilot program officially killed that requirement for service-based acquisitions. Thanks to a massive secondary market liquidity injection, banks are now approving $5 million deals that would have been rejected just 6 months ago. The industry has shifted away from the old collateral-heavy regime. Lenders are no longer obsessed with heavy hard assets. They want to see clean books that prove true enterprise value and sustainable cash flow margins. Under the relaxed equity injection guidelines, you can successfully structure a $4.5 million loan on a $5 million purchase price. The strategy relies on using seller carryback notes as quasi-equity under the new 2026 rules. This maneuver minimizes your personal cash required at closing. If you're targeting the specific high-margin service sectors the SBA is currently fast-tracking, like commercial HVAC, plumbing, or landscaping, this 90% leverage model is highly effective. Increased institutional demand for SBA paper has actually lowered interest rate spreads for first-time buyers. Because of this liquidity premium, banks are increasingly willing to waive personal residence collateral requirements. But here's the catch. These 2000 regulatory shifts heavily favor institutional-style acquisitions. Small, messy lifestyle business purchases are facing much stricter scrutiny and are no longer the priority for underwriters. To capitalize on this environment, you must present a professional, search fund-style profile to lenders. The new 2026 Managerial Experience Waiver allows you to bypass the traditional 5-year industry experience rule. However, you need bulletproof documentation proving high margin stability to trigger the pilot program's preferred underwriting terms. You cannot walk into a bank with messy spreadsheets. Clean, logical financial reporting that translates your daily operations into decision-grade data is mandatory. The timeline from the initial letter of intent to final funding is significantly faster under the streamlined 2026 pilot approval process. The most common pitfall that stalls a deal is failing to align your financial models with the bank's new expectations. At Sense IQ, we partner with a limited number of founders at a time. We aren't just doing your monthly data entry, we are structuring your books so you can actually scale or acquire. We work specifically with owners who want proactive ideas and are ready to grow. If you are serious about getting your financials deal ready for a major acquisition, reach out and let's see if we are a mutual fit.